All right, everyone, buckle up and plug in because you've landed back in the Eco Wealth Lab.
Great to be back.
And let me tell you, the crypto beaker is bubbling over with some seriously fascinating developments. We are genuinely stoked to dive into all of this with you today.
It really feels like things are moving fast again. Lots to cover.
Now listen, we know your brain is, well, a precious commodity. Probably already crammed, right? To-do list, maybe that viral cat video.
Yeah, maybe a grocery list somewhere in there too.
Exactly. So for just the next little while, and we're talking like a snack-sized chunk of your day, we're practically begging you, lend us your ears.
Come on, just a few minutes.
Think of it as a micro investment. Could pay off big in crypto know-how. We promise we'll make it entertaining, maybe drop a knowledge bomb or two.
And hopefully help you sidestep a crypto pothole you didn't even see coming.
That's the goal. So our mission today, pretty straightforward.
Yep, just trying to distill the crucial info from, the recent whirlwind of crypto news.
We've seen market shifts, some really exciting progress, and the always evolving regulatory stuff.
We're here to connect those dots for you. Highlight what really matters.
Okay, let's kick things off. The crypto market as a whole feels like we hit a bit of a speed bump recently, hasn't it?
Indeed. Over the past day or so, we saw a noticeable pullback across the market.
Like Bitcoin.
Yeah, Bitcoin dipped below $84,000. And the overall global market cap for crypto, that saw a decrease of about 3.3%.
Okay, 3.3%. So not world-ending, but definitely a dip.
Exactly. This kind of volatility is, well, it's inherent in the crypto space,
Right. Not exactly time to hit the panic button, but worth noting for sure. And it wasn't just Bitcoin feeling the heat, was it?
No, the correction was quite broad, actually. Cardano took a significant hit, down over 6%.
Ouch.
And other major players like Ethereum, XRP, Solana, even Dogecoin, they also saw declines. It was a fairly synchronized move downwards.
So what's the story there? What's causing this collective exhale from the market?
Well, there are probably several factors at play. We're likely seeing some investors, taking profits.
Yeah, after the recent gains, makes sense.
Yeah, after the considerable upward momentum many of these assets enjoyed. It's like climbing a mountain, right? Eventually, some folks need to stop, catch their breath.
Maybe head back down a bit with their winnings.
Exactly. We've also seen net outflows from Bitcoin ETFs. So more capital left those funds than came in.
Which naturally puts downward pressure on the price.
Correct. And there are also indications of potentially weaker accumulation trends, suggesting maybe the rate of new money coming in or existing investors buying more might have slowed down a bit.
Okay, profit-taking ETF outflows. And you mentioned broader economic jitters may be creeping in.
Exactly. There's this growing undercurrent of caution in the wider economy, increasing concerns about a potential recession. And that kind of macroeconomic uncertainty often leads investors to become more risk-averse across the board, really.
And that spills over into crypto.
It certainly can, yeah.
So is this like a sign of a bigger shift brewing, or could it just be a temporary breather before things potentially pick back up again?
The million-dollar question, isn't it? Some analysts are looking at this as potential consolidation for Bitcoin.
Consolidation, like finding a new floor.
Yeah, kind of digesting the recent gains, establishing a new base before maybe continuing the longer-term bullish trend. But, and this is important, it's crucial to remember this pullback does reflect that increased risk aversion we talked about.
Yeah.
The market's volatile. These dips happen.
So for long-term believers, maybe even an opportunity.
Potentially, yeah.
Yeah.
If they believe in the fundamentals, a dip like this might be seen that way.
Okay, that's a balanced perspective. Now let's zoom in a bit. Specific happenings.
Yeah.
BNB chain kept up its regular token burn.
Yes, they did. Successfully completed their 31st quarterly token burn.
How much are we talking?
This one involved removing roughly $916 million worth of BNB from circulation.
Wow, nearly $1 billion. Just poof, gone.
Pretty much. For anyone newer, a token burn permanently reduces the total supply. The idea is, potentially increase scarcity, maybe boost the value of what's left over time.
Got it, like taking coins out of the game. And what's the latest on Ethereum's dominance? Still the king of dApps.
Oh, definitely still a powerhouse in the decentralized app ecosystem. Yeah. Get this, in Q1 2025 alone, the network generated over $1 billion in fees.
$1 billion in fees, just for using the network.
Yeah. That figure really underscores the high level of activity, the real-world utility being built and used on Ethereum. It cements its position as a leading platform.
That's some serious activity, testament to the developers and apps there. Now, shifting focus a bit, north of the border, Canada.
Solana ETF news.
That's right. Figment has been chosen as the staking provider for 3IQ's upcoming Solana ETF in Canada.
Okay, so Figment handles the staking for the ETF. Correct. It's another step in making Solana more accessible to, like, institutional investors through traditional products. Staking here means participating in the network, validating transactions, earning rewards.
Which then get passed on to the ETF holders, presumably.
That's the idea, yes.
Now, hey, remember we talked a while back about the OM token, Anchira, and its price swings? Sounds like the team responded.
Yes, good memory. Following that recent volatility in the OM token price, the non-tree CEO actually proposed a token burn.
As a direct response.
Yeah, as a measure to try and restore investor confidence. It shows, a proactive approach to addressing market concerns, which is generally a good sign.
Good to see teams listening. Now, Tether, usually known for their stablecoin, USDT, they're getting into Bitcoin mining.
That's correct. Tether is backing a new Bitcoin mining pool called Ocean.
Interesting move. Why?
Well, their stated goal is to contribute to greater decentralization within the Bitcoin mining network.
Ah, the decentralization angle, always key.
It's a core part of the crypto ethos.
Yeah.
Distributing control, not concentrating it.
Makes sense. Okay, what about the XRP ETF? Any movement there? Feels like we've been waiting forever.
Well, there are reports, just reports, mind you, that ProShares has provided an update on their application for a spot XRP ETF.
An update doesn't mean approved, but progress.
Exactly. Doesn't guarantee anything, but it shows the process is still moving forward. Something XRP folks will be watching very closely.
Keeping fingers crossed for them. Now, a new token launch. QLA, what's the lowdown on that one?
Okay, so the QLA token launched recently. Its stated aim is funding real-world assets.
Real-world assets. How?
Through community governance. And interestingly, their approach has no staking. It's one wallet, one vote.
Huh. Direct democracy, kinda. Where can people find it?
It's available on platforms like MEXC and some others too. The model really tries to give the community direct say in how project funds are used for those real-world investments.
Very direct approach to decentralized decision-making. Okay, speaking of big moves, Securitize. Huge acquisition in the institutional space.
Absolutely massive. Securitize acquired MG Stover's fund administration unit.
And what does that mean practically?
It basically propels Securitize to become the largest digital asset fund administrator globally. They're now overseeing, get this, $38 billion in assets under management.
$38 billion, wow.
Across 715 funds. And what's really noteworthy is this includes funds managed by traditional giants like BlackRock.
BlackRock using them. That really shows how much digital assets are integrating into, well, the establishment.
It really does underscore that trend, big time.
Okay, and sticking with big institutions, Standard Chartered, they have some pretty bold predictions about stablecoins.
They do indeed. Standard Chartered released a forecast suggesting the total stablecoin supply could reach, wait for it, $2 trillion by 2028.
$2 trillion in stablecoins.
That's their forecast. And furthermore, they think new laws governing stablecoins could drive about $1.6 trillion in demand for U.S. T-bills as issuers hold reserves.
Whoa. That's potentially a huge impact on traditional bond markets, a massive influx into U.S. debt.
Significant potential impact, absolutely.
And it's not just Western institutions, right? Seeing more corporate adoption over in Japan, too.
That's correct. A company called Value Creation, listed on the Tokyo Stock Exchange, announced plans to add another $700,000 worth of Bitcoin to their treasury.
Bringing their total holdings up?
Yeah, up to $2.1 million in Bitcoin. It's definitely indicative of a growing trend among Japanese corporations seeing potential in BTC.
Fascinating to watch that global corporate embrace happen. Now, switching gears a bit, a harsh reminder recently about infrastructure reliance. The AWS outage?
Yes, that recent Amazon Web Services outage definitely caused disruptions for several big crypto platforms. Binance, KuCoin, MEXC, others too.
Just shows how much the current crypto world still relies on centralized cloud providers, doesn't it?
It really does. A stark reminder of potential vulnerabilities. It arguably strengthens the case for, truly decentralized infrastructure solutions down the line.
Good point. Balancing decentralization ideals with current practicalities. And unfortunately, another security exploit. KiloX this time.
Sadly, yes. KiloX suffered a pretty significant loss, around $7 million. Seems it was due to a manipulation of their price oracle.
The thing they used to get price data.
Exactly. And KiloX took a rather unusual step in response.
Oh, what'd they do?
They offered the hacker a 10% bounty if 90% of the stolen funds are returned.
A bounty, like keep 10%, give back the rest.
Yep. but they also threaten legal action and public identification if the offer isn't taken. So a carrot and a pretty big stick.
Wow, that's a bold strategy.
Yeah.
Let's see if it works out for them. On a brighter note for DXs, pump swap sounds like they're booming.
PumpSwap DX has seen a huge surge in activity. They hit $2.5 billion in weekly trades.
$2.5 billion in a week.
Yeah, that's up 40%. Record activity, record fees for the platform. And maybe most remarkably,
Go on.
over 500 individual wallets reportedly made $1 million or more just from trading meme coins on their platform.
500 wallets made over $1 million on meme coins. Those are absolutely eye-popping numbers.
Really highlights the intense and, let's be honest, often highly speculative nature of that market.
The allure and the risk right there.
Yeah.
But not all news is great. There's a lawsuit involving Phantom Wallet over a theft.
Yes, Phantom Wallet is facing legal action. It's over the theft of about $500,000 worth of the Wiener token from a user.
Ouch. What's the accusation?
The lawsuit alleges inadequate security, specifically unencrypted storage of private keys. The plaintiffs are seeking $3.1 million in damages.
Unencrypted keys. That's not ideal. Really underscores the importance of wallet security, doesn't it?
Absolutely critical, both for users to understand how their keys are secured and for wallet providers to implement really robust security. Self-custody demands diligence.
So true. Okay, Tether again. They're investing in a company called Figment to boost stablecoin utility.
That's right. Tether invested in Figment. They focus on enhancing stablecoin payment solutions and self-custody options.
So moving beyond just trading, making stablecoins usable for, like, everyday stuff.
Exactly. It signals Tether's broader vision, improving financial access, increasing merchant adoption for actual transactions, trying to integrate stablecoins more into the real economy.
Interesting goal. And finally, on the project front, a hack affecting ZK Sync.
Unfortunately, yes. ZK Sync had a security breach recently. One of their admin accounts got compromised.
How bad was it?
Resulted in the loss of about $5 million worth of tokens. And that incident led to a pretty sharp drop, about 20%, in the ZK Sync token price.
Yikes. Are user funds safe?
The ZK Sync team was quick to reassure the community that user funds held on the network are secure. They say a thorough investigation is underway.
Well, that's something. Still concerning to hear about these admin account breaches. Highlights the ongoing need for vigilance across the whole ecosystem.
Constant battle, really. Robust security practices are non-negotiable.
Okay, let's pivot slightly. Regulatory developments. We're seeing a proposed Clean Cloud Act. What's that about?
Yes, a group of Democratic lawmakers introduced this. The main goal of the Clean Cloud Act is to incentivize and push U.S. Bitcoin mining operations and also AI data centers.
Both of them.
Yeah, push them towards using cleaner, more sustainable energy sources. It reflects that growing focus from policymakers on the environmental footprint of these industries.
Right. The environmental angle getting more official attention. And heard whispers about the Treasury looking at banking rules again because of bond market stuff.
That's correct. The U.S. Treasury is reportedly discussing possible tweaks to banking regulations. It's partly in light of recent bond market developments.
How might that affect crypto?
Well, the specifics aren't clear yet, but these kinds of regulatory shifts can definitely have ripple effects. Could influence how banks interact with digital assets down the road. Always something to watch.
And speaking of finance and government, VanEck's Big Bonds idea, using Bitcoin to tackle U.S. debt. That sounds ambitious.
It is indeed a novel concept. VanEck floated this idea of bit bonds, basically exploring if Bitcoin could somehow be used as a mechanism to help manage or maybe even reduce the national debt.
Wow. Talk about out-of-the-box thinking.
Definitely sparks discussion about crypto's potential role in, much broader macroeconomic solutions. Pretty creative.
Gotta appreciate the attempt. And shifting just slightly, again, traditional politics. President Trump considering a ban on stock trading for Congress members.
That's the report, yes. Suggesting he's considering a ban on stock trading for members of the U.S. Congress.
That old chestnut. It keeps coming up, doesn't it?
It does. It's a topic with significant public interest tied to concerns about potential conflicts of interest, insider info, that sort of thing.
Interesting to see these potential overlaps, traditional finance rules, political ethics, and maybe even how they think about crypto regulation, too. Okay, finally, let's just get a quick pulse check on the broader markets. Outside crypto, U.S. stocks were a bit mixed recently.
Yeah, they were. U.S. stock indices actually closed lower on Tuesday, even though some big banks like BofA and Citigroup had positive earnings.
Okay. So good bank news wasn't enough.
Apparently not for the overall indices that day. It contrasted a bit with the more upbeat global mood on Monday, which had followed some tariff easing news. So yeah, a bit of a mixed picture in equities.
And what about the usual suspects, treasury yields and gold?
U.S. Treasury yield eased off slightly after having a notable rise the week before. Meanwhile, gold. Gold continued its climb.
Gold bugs happy, often seen as that safe haven, right? Store of value when things feel uncertain.
Exactly. A hedge against economic uncertainty.
Okay, wow. As always, that was a lot to absorb.
It really
It
was.
just underscores how interconnected everything is, doesn't it? Crypto markets, broader economics, tech developments, regulation.
Absolutely. Staying informed across all these different domains is pretty much essential if you're trying to navigate the crypto landscape these days.
So, wrapping up this deep dive, we've hit market pullbacks, some really cool project updates, major institutional plays, security scares, regulatory chatter.
It's a constantly evolving space.
Yeah.
Hopefully this gave everyone a clearer, more insightful overview of some key recent events.
Yeah, understanding these pieces, how they fit together, their potential implications, it's all crucial as you form your own views on where digital assets might be heading.
Couldn't agree more.
On that note, here's a thought to really sink your teeth into as we sign off.
Ooh, I like a closing thought experiment.
Okay, so given the increasing institutional interest we keep seeing, right, but also the persistent security challenges, like those hacks we mentioned,
Yeah.
how do you see the balance, between the centralized forces pulling things one way and the decentralized ideals pulling the other?
Hmm.
How will that shape crypto's future path?
That's a big one. Centralization versus decentralization in practice.
Yeah.
Yeah, that's a really pertinent question to ponder as this whole thing matures.
Exactly. Something to chew on. And with that, food for thought lingering, a huge thank you for tuning in to the EcoWealth Lab once again.
Yeah, thanks everyone for listening.
We genuinely appreciate you spending your valuable time with us. Make sure you head over to our website. We'll have links to the stories. And you can join our community forum. The conversation there is always buzzing.
We do love hearing your perspectives.
Absolutely. So until our next deep dive, stay curious, keep exploring, and we'll catch you next time.